I would like to remind you of the unit economics we expect from our microfactories over the longer term. We continue to expect total CapEx to be approximately $50 million per microfactory, with a contribution of over $100 million of annualized margin when producing 10,000 vans per year on 2 shifts. We believe this annualized contribution margin target is achievable by the end of 2024. Our contribution margin target assumes we will continue to optimize the vehicle bill of materials, including arrival components, and improve the operational efficiency in subsequent microfactories. I will now turn the call over to Dennis for closing comments.
Thank you, John. I would like to remind everyone that what we are doing is very complex and no one has done it before. We have developed incredible enabling technologies, our own core components and device software that are now certified, proprietary composite materials that eliminates expensive paint shops and metal stamping and is designed for production with a Class A finish. Autonomous mobile robots to move parts and vehicles in a microfactory replacing a conveyor belt. Software-defined microfactories, which reduces CapEx and time to market. We have tested all of the key operations required to assemble a vehicle. We managed to design and certify 2 vehicle platforms that are currently undergoing road trials. All of these technologies are coming together to achieve something truly unique in the industry, new method to design and produce vehicles. It means our business can scale very rapidly with fast time to revenue. Our ambition is to produce multiple vehicle platforms in hundreds of microfactories, each producing over 100 million of margin per annum, equating to 1 million vehicles and target 10 billion margin per year. Our enabling technologies, proprietary hardware, software, materials, and new-gen robotics sets us apart from the rest of the industry. The start of our first microfactory is a big step towards achieving our vision. It is the move from 0 to 1. With that, let's start our Q&A.
As a reminder, if you'd like to ask a question, please use the raise hand function located at the bottom of your screen. Once you've been called on, you'll have the ability to unmute your audio. Our first question comes from Steven Fisher at UBS. Steven, your line is open.
Thanks. Good afternoon. Wondering if you could just talk a little bit about what happened over the course of the quarter that caused you to take the delivery expectations from 400, 600 down to 20. I'm sure there are a variety of factors there, but maybe you could just talk about that a little bit. That would be helpful. Thank you.
Look, actually, many things happened. And first of all, we do, like, instead of 2 factories, we do 1, and we do this to save cash. I mean, so this is number 1. So our capacity is reduced. The second one is actually supply chain and how we're receiving the parts. It's you know that like all market is impacted. I mean, so it's nothing particular complex there. So it's not about that we're not receiving something. It just sometimes it's delayed. I mean, so that it just comes later than it should be. And the third one is we actually taken very conservative view, because originally we wanted to make like many shifts to push the volumes for the end of the year, but we are switching our mode to more preserving the cash, because like anything you do on extreme level, so it just costs more. And we understand that if we will have like more shifts but not fully utilized immediately because of ramp up, we just will waste the cash. So we decided that strategically it's better for us to spend cash much more careful and focus on delivering first vehicles in a perfect condition to our customers, and then scale from that point. Because materially, for us as a company, there is no big difference between, I would say, like 400 vehicles or like 20, because number is small anyway. I mean, so we wanted, like, our factories are designed to produce 10,000 vehicles a year. So we will produce them obviously, but a bit later. And the effect why it's happening, because if you plan 400 to 600 vehicles from the beginning of the year, you still have a lot of buffers like inside. So if something didn't happen within a couple of weeks in the beginning, so you still have time until the end of the year to address that. in our case, everything is happening with the last 4 months of the in the last 4 months of the year. So any delay with the supply of a couple of weeks, it's a big impact on the overall time we have within the year. So actually, we are extremely happy about Q2. I mean, so we achieved amazing things. I mean, so first one is certifying our vehicles. We did it much quicker than the industry does today. So even the organization which were certifying us said they've been very impressed with the efficiency and how fast we managed to do this. It's really important moment because it's never been done before in industry, and we do it first time, and from first time we did it right, and we already got a very strong competitive advantage on this stage. So we know how to do the certification, and we have all the necessary tools and skills to do that. So this is a big event for us. The second one is that actually factory works. I mean, so we installed all the equipment. Parts are all the parts which are arrived already. So we go through the stages of assembly, and it works the way we plan. Again, we do it first time. It's never been done before. It's something which we were planning and predicting, but we're so pleased that it's happened actually the way we planned. Even world around us is very distracted with everything, but we managed to keep us on track. So in general, we believe that our results of Q2 are remarkable and amazing. So we're extremely pleased with that.
That's helpful. And I guess when in 2023 at this point do you expect to start production in Charlotte, and just latest thoughts on how quickly you think you could ramp up to that 10,000 unit production at both locations?
Look, I really don't want to speculate on that particular question, because of course we have our internal plans, and we believe that our method, because it's not a complex factory, it's a very small factory, 10,000 square meters as assembly line, only assembly line is 10,000 square meters. So that it's not so many people who we need to train and organize kind of things. And installing equipment is relatively straightforward. So our internal plans is normally it should take us 6 months from the moment we start to put equipment to the moment factory is ready. And because we are taking the learnings from the Bicester factory, so we don't need to go through the same cycle. So we're expecting that Charlotte will be much quicker in terms of ramping up, because we will take all the learnings from the first factory. I don't want to give you a particular number that to make it promise, but we believe that the shuttle factory is going to be a jewel in our in our business, in the way that we will we are, as I said, extremely pleased what's happening in Bicester, but as I said, we know many things we want to optimize, and the Charlotte will come as a much better version of that. So we cannot wait when we will start it.
I just want to remind everyone that the microfactories are essentially, they're built to scale rapidly with faster time to revenue. So I think that's getting the first one right. We'll be able to scale microfactories rapidly, of course, depending on access to capital. So again, to Dennis's point, we're not discussing 23, but we do have a very unique production facility in the microfactory that lets us scale in parallel, at 20,000 square meters, regular warehouse, like we've talked about before, off-the-shelf equipment, and all our own internal processes.
Other comment which I want to give is that right now, we are switching from the mode where we have 2 products, 2 shifts, 2 microfactories, to the mode where it's 1 factory, 1 shift, 1 product. And I honestly, as the CEO of the company, I would say that we should do it before, but we've been so much focused on the growth, so that we said let's do more. So now, with again changes on the market, so that the cash spent is much more important than anything. So we believe that this opportunity to switch to the mode where it's 1 product, 1 factory, 1 shift gives us better chances to be successful. So I think it's something which we should do anyway. Focus.
I think it's a level of flexibility that the rest of the industry doesn't have.
And John, maybe just lastly for me, what's your expected ending cash at the end of Q3? And I know you intend to draw the 210 million next year, but what's the when is that draw expected, and what do you expect your end of 23 cash balance to be?
So I expect us to end 23 with cash in the bank currently. I think I referenced that we would end Q4 with between $300 and $350 million of cash. I would expect, just given the fact that we're in the middle of executing right now the cost reduction initiatives that we've announced, I think the cash burn in Q3 will be more than I would expect in Q4. I don't want to guide ending Q3 cash. I think we're on track to hit our Q4 cash guidance, and I do expect to end 23 with cash in the bank. I think looking sort of out beyond 2022, we're targeting, it's going to be lumpy as we go throughout the year, but somewhere between $100 and $150 million of cash a quarter, depending on which quarter that we're in, is sort of how we're looking at the cash burn next year.
Other thing which to comment here is that we were saying that we're planning to save up to 30% of the spend, but it's not because we've been not efficient in cash spend before. So we're extremely efficient. I mean, so if you just see how much cash we spent so far in the history of organization with what we achieved. I mean, so I don't know more efficient organization than we are in this industry. And what happened right now is that we are reducing the scope. So because scope is becoming smaller, we need to have less people to do that, and our spend is going to be less as well. So that's our exercise we do here.
Thank you very much.
Your last question comes from Jeffrey Osborne with Cowen. Jeffrey, your line is open.
For the question, just one clarification on the cash, and then I had a couple questions for Avinash on the cash. John, do you expect any cash restructuring costs in Q3 or Q4?
It is included in our expectations of year-ending cash. Our current view on restructuring is it'll be approximately $25 million. Most of that will occur in Q3.
Got it. That's helpful. And then either for Avinash or Dennis, in Vista today, are all the cells, I forget if it's 12 or 14 production cells, remind me there, but are those set up? Have you produced any pre-production vehicles, in series with all of those, or give us an update on if I walked in the factory, what I would see would be helpful.
Look, we did everything we could in terms of test with the parts we had, because again, we were trying to limit number of sets we were using on the factory for all the commissioning. So we used all of them, like everything what was available, and we run like dry runs and we have like physical, like full runs, like on the factory. So now, if you will go to the factory, what you will see the parts, like a cabin or structure, which are actually physically assembling. Right now, it's happening like now, today, tomorrow, like every day.
Yeah, AMR's fully working and installed.
Composites are produced, batteries are, battery modules are produced from the factory, from the production process. I mean, so like it's we're in a very good shape now.
That's great to hear. And then I was just curious, many of your peers in the EV space have been raising prices just due to battery inflation. I think your prior positioning of the vehicle was, more expensive than the incumbent, Morgan Olson UPS vehicle, but less expensive than competitive EV solutions. I'm just curious, has your pricing philosophy changed just due to
the philosophy hasn't changed? Yeah, Jeff. The philosophy hasn't changed. We'll remain in line, as you can imagine, with rising inflation and supply chain issues. This is a challenging market for the whole industry, where generally prices are going upwards. But our philosophy to be competitively placed between ICE vehicles and competitive electric vehicles remains the same.
And just to be clear, we expect our ASPs to increase with the industry.
Got it. That's all I had. Thank you.
Thank you, Jeff.
Thank you for your questions. I'll now pass the call back to Avinash for closing remarks.
I'd like to thank everyone for joining. As mentioned by Dennis, this is a very big moment where the industry sees the microfactory for the first time producing vehicles coming this quarter. So As Dennis mentioned, this is a 0 to 1 moment. This is, we believe, fully transformative in how the industry will operate going forward. So thanks everybody for joining.
Yes, and I would like to also give like a bit of comment here, is that like I founded this company in January 2015 with a vision that there is a better way of making electric vehicles. And actually, ultimately, we want to see that it's not only electric vehicles. I mean, so anything. I mean, it could be like the other industries as well, like furniture or electronics and many other things. We'll see that because we just decided in the beginning to do it with electric vehicles, and this is our focus to do commercial vehicles. And then it was like planning like what should come together. I mean, so all those technologies which were never existed on the market before, it's not something you can come and buy on the market. So we needed to develop a lot of components, create the team which is capable to create it, certify, create the software for that, actually do the full design. If you just take our van, actually in the shape it is now, like beta, we call it a beta version, second version. First sketch of this product was ready only in February 2020. So it took us less, a bit more than 2 years from the moment of the first sketch to the moment vehicle was certified. It's never been done in history before. I mean, so it's like normally it takes like at least 5 years to do that, but we managed to do it within 2 with much smaller resources, like to do that. And then all the kind of things around like factories, we were envisioned that the robots are going to be flexible, that one factory can produce many type of models from the same factory. It's something again like and totally new interfaces, which are instead of welding adhesive, like new materials, which is not standard metal body, but like new type of composites. I mean, so all this planning is, and then it comes to the point where in Q3 2022, it all comes together. For me, it's the moment almost like assume you're in the dark room, you're like hitting the darts, and then like the light goes on and this dart is in the 10. So that was the mission impossible we're doing. And I'm so happy that it happened. I mean, so that like in Q3 this year, we already know it works exactly the way it was planned in 2015. So watch the space, many things is going to happen here.